Good morning, welcome to our weekly roundup on 12th of February. How quickly the weeks are going. I'm Sarah Alexander, I'm the Managing Director of Lewis Brownlee. At the start of the week, I start to make notes as to what I'm going to talk about on the weekly roundup. And I always think, oh, there's not going to be much happening this week. By the end of this week, when I was going through the notes this morning, I've actually taken blocks out. So that's how busy life is, and that's how quickly things are changing. So I'm going to talk briefly about Brexit. I'm going to talk quite a lot about updates to the various coronavirus support measures and more information, more guidance. And then finally, I'm going to touch on some tax planning points as we head towards the budget day on the 3rd of March and end of the tax year. So starting off with Brexit then. It's been well over a month since the implementation of a full border between the UK and the EU. Because of the pandemic, trade has been unusually down. But what we can say is that there is a huge amount of additional red tape at the borders, and many small businesses in particular are being affected by this. So there's more red tape in particular for imports that's impacted these small businesses. Customs and single market rules are being enforced more strictly, and there have already been problems with fish, meat and cheese exports in particular. So the UK ends its grace period for importers on the 1st of April and full customs checks apply in July. So it will be interesting to see how the next few months evolve in respect to that. And hopefully there'll be new systems and practices will start to emerge, which means that that's slightly smoother as we get used to this new normal. Northern Ireland Protocol. So there has been significant discussions over the Northern Ireland Protocol in the last week or so, and further discussions are expected. The UK has written to the EU asking for agreements to an extension of the grace period for the Irish sea border. At the moment, supermarkets and other businesses are being allowed to operate with reduced requirements for paperwork and certification when moving goods from Great Britain to Northern Ireland. The key date for the Northern Ireland Protocol is the 1st of April, when the initial grace period finishes. So again, keep an eye on that if you trade with Northern Ireland. So and there's still lots of areas of Brexit that aren't finalised still. So many areas where the UK and the EU have not yet finalised agreements on their future relationships, and the negotiations are ongoing. So as yet, there's no agreement on data sharing and financial services, though it's hoped by March agreements can be made and new rules will be implemented. So watch this space. So some key dates for Brexit. So April, the movement of goods rules for products and animal origin come into force. June, the settlement scheme registration process for people from the EU to remain in the UK ends. In July, new border controls will come into force after the 6-month grace period, and customs declarations will become permanent. I think that the biggest impact we've seen with our clients in terms of Brexit is VAT on purchases from the EU. So we'll continue to get asked questions about post-Brexit VAT. So quick reminder, before Brexit, if anyone purchased goods from the EU on an online platform, say Amazon or eBay, VAT was paid at the rate charged by the country you purchased the item from. VAT would have been applied at the point of purchase, and customers paid the price they saw advertised. In addition, many EU businesses selling goods online were below the VAT threshold and there was no VAT charge. Now all EU sellers have a UK VAT charged automatically by online platforms that they use. So you may have seen that some prices have increased by 20%. In addition, any purchases from the EU over £135 will have VAT payable by the purchaser at the point of delivery, which could be your doorstep. In addition, because of the customs documentation required, some sellers have increased their prices to cover the costs. Some have ceased selling to the UK completely. So there's been some changes there, and you might see that in what the cost of things that you're purchasing. Okay, so moving on to coronavirus support update. Quite a lot to talk about on this week. So deferral of last year's VAT. So you will remember when we first went into lockdown in March last year, anybody that had a VAT liability March through to June was able to not pay that VAT. And at the time, they said it would need to be paid by the 31st of March, which is 6 weeks off. So they've introduced a deferral of VAT scheme. So the VAT deferral new payment scheme will open from the 23rd of February, and it will remain open up to the 21st of June. So you've got a few months there to apply to the scheme. So the new scheme will let you pay your deferred VAT in equal instalments, interest-free. You can choose the number of instalments from 2 to 11, depending on when you join. I'll talk about that in a second. To join the scheme, you need to opt in. You've got to do that yourself. You can't get us as your accountant to do that for you. You need to be up to date with your VAT returns, and you need to have joined by the 21st of June. If you don't join by then you're going to have missed the opportunity. When you join the scheme, you'll pay your first instalment then. You'll pay your instalments by direct debit, and if you join the scheme, you still have a time to pay arrangements for other taxes, debts and outstanding VAT. So it's not often when you try and get a payment plan for taxes, one of the questions they ask is, are you up to date and paid everything else? So income tax or similar. Whereas on this scheme, you can join it even if you've got time to pay arrangements on other taxes. So the month you decide to join the scheme will determine the maximum number of instalments that are available to you. So if you join the scheme in March, you'll be able to defer your VAT in 11 instalments or fewer. If you join in April, it'll be 10 instalments. If you join in May, 9, June, 8. Okay, so you've got this window of 4 months from February to June to join the scheme. When you join, you pay an instalment then, and then you defer the rest up to March the following year. So that's why it's 11, 10, 9, 8, the later you join. So before joining the scheme, you must create your own government gateway account if you don't have one already. You have to make sure you're up to date with the VAT, with all your other VAT returns. So they all need to be in for the last 4 years. If you've spotted any errors on your VAT returns, correct those as soon as possible. Make sure you know how much you owe, including the amount you originally deferred and how much you may have already paid. A number of clients did start paying in smaller instalments, not with an agreed payment plan, just because they were starting to pay the VAT. They might want to more formalise that now, and they can by joining the scheme. If for whatever reason you can't use the online service, so there may be circumstances where you cannot use it. So if you don't have a UK bank account, if you cannot pay back direct debit, or you've got dual signatories on your account, if you want to join the scheme, then there's a phone number that you can ring and deal with it that way. I think that'd be quite rare. I think most clients will be able to access the online portal and arrange that. Okay, so key dates, just a reminder on that then. So your VAT that you deferred last year, join the scheme to pay it in instalments, opens on the 23rd of February and goes up to the 21st of June. Right, bounce back loans. So I said quite a lot last year that I was very anxious on behalf of clients about what this year would bring, because they had that VAT that they deferred last year that they didn't pay. They took out bounce back loans to see them through, and those are going to start to be repaid this year. So HMRC are helping VAT payers with their deferred VAT, and also the loans. They are made some changes to how bounce back loans are repaid. So repayments on the loans were due to start 12 months from the initial drawdown, and they've introduced this pay as you grow repayment flexibilities to enable borrowers to tailor their repayment schedule with an option to extend the length of their loans from 6 years to 10 years. So obviously that reduces the monthly repayment if you're paying it over a longer period of time. Obviously it costs you more in interest the longer you keep that debt going though. And you could make interest only payments for 6 months or pause repayments for up to 6 months. So there was some flexibility introduced recently. Now they've extended the flexibility options more. So so what they've done is extended the flexibility of the pause repayment option, which will now be available to all from their first repayment rather than after 6 repayments have been made. So you could have paused your repayments, but you needed to have paid 6 months already. So they've taken that requirement away. So this will mean that businesses can choose to make no repayments on their loans to 18 months after they were originally taken out. And these pay-as-you-grow options will be available to more than 1.4 million businesses that took out loans of nearly £45 billion. It's a huge number, isn't it? It's massive. Anyway, as ever, when we finish this roundup today, there'll be an email that gets sent, and all the links are on that email to the various places to go and look at the government website to get more detail on these things. Right, coronavirus job retention scheme, furlough scheme. I was quite shocked yesterday. I saw an article that it would appear that an error has been embedded in HMRC's job retention scheme calculator, meaning that employers may need to recalculate furlough claims for January. This isn't good news. So some employers will need to recalculate their claims if they use the calculation before the 21st of January, and all of the following applied. So if the claim contained employees who were not on a fixed salary, if the employer used an employee's pay for January 2019 as reference pay instead of 2020, and the employee's pay was different in January 19 to January 2020, then chances are your calculation was incorrect. There's quite specific requirements there, so hopefully it's not very many people that will have been affected. But if you're using their calculator, I strongly recommend that you go back and you look at how it was calculated and double check it. We've had a look at ours and we're comfortable that ours are all okay. But yeah, it's something to make you aware of, that there could be errors in the claims if you've used that software in January. More generally though, on the scheme, so the job retention scheme has been extended to the 30th of April. Claims for furlough days in January must be made by the 15th of February, and you can no longer submit claims for periods ending on or before the 31st of October. HMRC has updated its examples to help calculate employees' wages, national insurance contributions and pension contributions if you are claiming through the CJRS. A new example has been added to calculating wages for different types of pension schemes. So when all of these schemes were introduced last year, there wasn't a great deal of guidance of how you applied the various calculations. There's lots more examples now on the website which are worth looking at and should be a help. So claim and name, I think I might have mentioned this on a previous week's check-in, but I've got a bit more detail now. So on the 25th of February this year, HMRC will publish values relating to coronavirus job retention scheme claims, December 2020 onwards. So also from that date, employees' personal tax accounts will be populated with a message from the CJRS populated with a message that a furlough claim has been made by the employer on behalf of that employee. So what they're doing is they're going to be publicising details of the companies that have claimed furloughs for their employees, and they're going to be notifying employees that a claim has been made by the employer. I guess the point of this is to catch out any fraud. So claim and name, if you making a furlough claim, your details will appear in this list. So as we've always said from the very, very beginning, if you're going to make a furlough claim, make sure you understand the rules. And crucially, employees cannot do any work for you if you make this claim. So perhaps go back and check that all's in order. It's very easy to make mistakes. And perhaps claim 100% when it should have been 80%, or people work one day when then paid for 4 or something like that. So yes, just keep an eye out on that and make sure the claims are going in correctly. Sorry, correctly, not incorrectly. So we had an email came through yesterday. It was sent on behalf of the Chichester District Council. So if you're a Chichester District business that has been affected by coronavirus, they're encouraging you to sign up for a live webinar 2 p.m. to 3 p.m. on Friday, the 19th of February, to find out more about the COVID-19 government grant funding offered by the District Council. So there's lots of publicity about the high level grants that the government have put in place, but there's local funding as well. And there's quite a lot of detail on the Chichester District Council website about those grants. And they've got some PDFs that summarise them, but it's still very confusing. So they're running this webinar on the next Friday. So it's worth signing up for that to see if it's, so they'll talk you through the various different grants, and it might be that you'll be able to access some of the grant schemes there. So, so just to give you an indication, a range of business grant schemes are available, and support includes one-off top-up grants for eligible retail, hospitality, leisure businesses that are required to close during the current lockdown, as well as a grant for businesses that are not required to close but are still impacted by the current national lockdown. In particular, if your business has not been covered by other grant schemes. So there are also schemes for businesses that were affected by the national lockdown in November 2020 and last year's tier restrictions. So yeah, if you're trading in Chichester and have been affected, even if you're not totally closed like some are, it's worth signing up for that webinar to find out if there's anything that you might be able to claim. What do you do if you're employed and cannot work? Guidance for employees. So the DWP have updated its guidance for employees if they are employed and cannot work. In addition to the furlough scheme, it details that employees might also be able to get new style job seekers allowance if they're under state pension age, usually work less than 14 hours a week, 16 hours a week, and have made enough national insurance contributions over the last 2 to 3 years. Universal credit if you or your partner are under state pension age and you have less than £16,000 in savings, you might be able to get it at the same time as the new style JSA. And pension credit if both you and your partner have reached state pension age. So that's just a note for those that are employed but can't work. Kickstart scheme grant. So this is for an employer looking to create job placements for young people. You can apply for funding as part of the Kickstart scheme. The scheme has changed and you no longer need a minimum of 30 job placements to apply directly for a grant, which is really good news. It was quite difficult to access the funding if you were a very small employer. But you can apply online yourself, or you can do it via a organisation that can do it on your behalf. Again, details will be sent in the email after this. NHS test and trace in the workplace. So there's some guidance on what to do if you or someone you employ is contacted by NHS test and trace, including self-isolation, financial support. So the guidance on the government website has been updated in relation to that. So employers' guidance covers sector-specific recommendations on reducing the risk of transmission, the required risk assessment employers should undertake, what to do if an employee develops symptoms and order a test, and alerting those contacts if the test is positive, self-isolation and contacting local health protection teams if necessary. So yes, just that guidance has been updated again for those that might well need it. Okay, so that's it for today in terms of coronavirus support things, but like I said, quite a lot to be looking at, and particularly, like I say, the worry last year was this year would see lots of liabilities needing to be paid. There is support to spread that out for you should you need it, and your furlough claims, make sure you're doing them correctly. And if you're using the HMRC tools for that, it doesn't necessarily they've got it correct either, so do check those for January if you've made any. Okay, couple of very quick points. Tax planning. So this time of year we're contacting all of our clients to talk about any possible tax planning opportunities that we may need to discuss. This year's slightly even more important. This year is even more important because we've got a budget as well, a month before the end of the tax year. So Tom Foster, our tax director, and Shaun, who works with him within the tax team, did a brilliant presentation to the staff earlier on in the week to talk about all of the things that we need to be talking to our clients about. And they very kindly offered to record that into a video, which we can then circulate to all clients to talk through some really important things that they need to be thinking about. So I'm just going to quickly skim over the main things. I'm not going to go into any detail, but to give you a flavour of the sorts of things that we need to be thinking about, and just get you thinking really if you need to contact us to have a bit of a chat. So with the budget on the 3rd of March and the amount of government support that has been paid out in the last 12 months, we're expecting, well, it's difficult, isn't it? You know, is now the time to start to push taxes up, or will there be a little bit more time before they do that? Because given how challenging everything is already, I don't know. We don't know. Only time will tell. But probably the one of the things that is perhaps more likely than not, or you know, an area that they may well target is capital gains tax. So should you be thinking about selling, if you've got any assets and they're, you know, properties that you need to sell or anything like that, might not have a lot of time now, but should you be trying to sell any items before the budget on the 3rd of March? We've got a number of clients where their companies have come to an end. They've stopped trading, not necessarily because of COVID, just because it was the time was right for them to stop trading. And we're working very closely with the insolvency profession and one or two contacts we've got to get that that company wound up and the distribution made before the 3rd of March, because we know he's entitled to entrepreneurs relief, so we can get all of that out at 10%, but that might change on the 3rd of March. So that's just perhaps if you have got assets, capital gains, have a chat and see if there's a way to perhaps try and realise those gains before the 3rd of March. Use it before you lose it was the term that Tom used in the discussion. So more general tax planning points though: payroll, director salaries. Did you pay yourself enough salary this year? What's your salary going to be from April? We tend to review that every year with any directors that take a combination of salary and dividends as they're out of their companies each year. Employers' allowance, £4,000 from next tax year, but watch groups and connected entities. Changes to minimum wage are coming. If you pay people minimum wage but then insist that they pay for things themselves, so uniforms or similar, then you may fall foul of the minimum wage rules there. So watch out for that. Benefits in kind, so company cars, beneficial loans, insurances, health benefits, those sorts of things, health insurance, need to be on a benefit in kind or made good, and key date for there is the 6th of July. Working from home, there's a £6 per week allowance available to anyone who has been required to work from home at any time during this tax year. And once a period of entitlement has been established, the allowance for this year only will be available all year. So we've taken advantage of that. All of our staff have had to work from home for the last, 10 months since lockdown. So we were able to pay them £312 free of tax as the working from home allowance, which was a really positive thing that we were able to do this year. If the employer isn't reimbursing it, the employees can claim the tax relief via their tax return or HMRC's website. Really positive thing. You know, it's not a massive figure per se, but came in really handy for everyone, and it's not often that you can reimburse your staff in that way. So a really positive thing to do. IR35, new rules apply from the 6th of April. Look out for our talking points video on that one as well. That's coming soon. The impact of self-employment income support scheme grants and other grants on the self-employed might be quite shocking, unexpected. So I was looking at some accounting records, some zero records for a client that is self-employed yesterday, and his business had grown year on year, and he was entitled to a reasonable sum in terms of the self-employment income support scheme. And when he was able to work this year, he was very, very busy, and he also got additional grants because he's got property. So he got the £10,000 grant back in the summer, and other grants subsequently. So for the current year that we're in, for the current tax year, for the first time, I think he's going to be a higher rate taxpayer, which is quite an unusual turn up when you consider that he was totally closed during first lockdown and this. So he's had 3 months last year, at least a month this year, reduced trade in the summer because of just lockdown, and he's going to be a high rate taxpayer. So yeah, watch out for that. That's going to be quite interesting. And if you are a self-employed person that normally has tax deducted at source, so doesn't usually have a tax bill at the end of the year because it's already been paid, effectively, that those taxpayers as well are going to end up having to pay a tax liability when ordinarily it's taken care of. So that's a big area for you to be thinking about if you are self-employed. Get your accounts in early, get it done so you know where you stand is probably the main message there. Dividend allowance. So every taxpayer has got a 0% dividend allowance of £2,000. Have you used it? When you're paying dividends, you need to make sure they're appropriately documented. If you've got different share classes, check the rights. Crucially, have you got enough reserves to pay those dividends? Have you got enough retained profit so that you can declare a dividend to your shareholders? Pension contributions. So these are some new rules from last year. It used to be that if you earned over 110,000, then the amount you could put into your pension significantly reduced. Whereas that threshold has now gone from 110 to 200. So that's some good news, and some people might have missed that. So it's worth looking at what pension contributions that you make, and if you've been keeping them low because your other income is quite high, you may be able to revisit that and make an additional contribution before the end of the tax year. Capital gains tax, have you utilised your annual exemption? From the 6th of April last year, if you sold a residential property, you should have reported it within 30 days of completion and paid any capital gains tax to HMRC. Obviously, if there was a loss, you didn't need to bother, but we might find that 1 or 2 people have sold properties in the last tax year and not dealt with the tax as quickly as they should have done. So, and there's loads of other things that Tom and Shaun will be talking about. So, but I'm going to stop there now. I think that's probably enough for today. So just to finish off, just round up some key dates. So 15th of February, so next week, January furlough claims must be submitted. This month, end of February, is the deadline for getting your self-assessment tax return if it hasn't already gone in. 1st of March, domestic VAT reverse charge for construction services. We filmed a talking points video on that, so there's going to be a video that we're going to send around shortly that gives an overview of how that's going to work if you trade and you're part of the construction industry scheme. You must look at that. That's going to affect you. 3rd of March, 5% penalty if you've not paid your personal tax. 3rd of March, details of the full self-employment income support scheme grant will be announced. And 3rd of March is budget day, as I've already talked about. And 5th of March, our webinar that day. So this check-in that day will cover some of the key points covered in the budget. So I'm expecting that to be quite a busy webinar that day. So in the meantime, that's enough from me today. Like I say, look out for the email that will be sent after this, covering the key topics with some links to the various places online where you can get more guidance. But as ever, please call the office and have a chat if you need any more information. Other than that, have a wonderful weekend and I shall see you next week. Bye.